We're going to look at the best Bitcoin yields in crypto. I've done a thread about this maybe a week ago. I don't know. DeFi time is weird, but it deserves a video. And I've added some more yields here. Things are really heating up on the Bitcoin yield side of things. We had like this BTC-fi narrative for a while. And really, if you do chase like Bitcoin sidechains or L2s or even like native Bitcoin L1s, you can find some interesting yields. I'm not going to do that because that requires a lot of bridging and going onto new ecosystems that you may not be comfortable with, and the LTVs and TVLs are typically pretty low. But even if you're just in EVM or just in SVM, EVM just means like things you can connect your Rabby to, SVM just means Solana stuff, you can still find really good yields. Now, typically with Bitcoin, you're trying to find something between 3 and 10%. If you can find something between 3 and 10% on Bitcoin consistently, that's like trustworthy, then you're going to have a good time. If you can get higher than that, then you have a really good time. And so we're going to look for things sort of in that 3+% range. Now, the really easy ones, the ones that take no lift, the ones that are super simple are like the set and forget rate swapping markets. So fixed date, fixed rate, you just deposit it and then you wait until the expiry is over. You can find some pretty good yields. I mean, 5% to 3%, but these are all expiring in 16 days. So probably the juice isn't worth the squeeze. There are also some over on Spectra. This is the only one that pops up if you type in BTC. This is on Hemichain. So Hemichain is kind of one of those BTC chains that I was talking about that I wasn't really going to talk about, but I guess we're going to talk about it because 12%, this is pools, by the way. So you'd be LPing this. And so the cool thing is, I think all of the yield comes from the fixed rate. So let's go over to fixed rates and then see what's going on there. Let's do BTC. We could also just have done this instead. And yeah, 14.5%. That's crazy. $17 million of liquidity. That's a wild fixed rate, fixed date APR for Bitcoin. That's probably the highest we're going to find in terms of fixed rate, fixed date. There are some variable yields that even beat this. But I mean, shout out to Spectra. This is very deep liquidity. This is a really good expiry. This is, over a month remaining at 14%. So you get more than 1% ROI on your Bitcoin for getting into this. Yes, you do have to go over to Hemichain. I think Hemi has Stargate usage. I don't know if that's true, but I think they do. If not, Hemi probably has their own native bridge, but could be worth the bridging hassle to do that. Now, the next one in terms of fixed rate, fixed date stuff, we're going to look over at SVM. Raex has one market. It's Frag BTC. So Fragametric, it's a restaking protocol. They're utilizing SOL Bitcoin for like the underlying yield. Plus there's this like points component to it. And you're also getting Raex points for being over there. So it's okay, right? 3.2%. Really, it's not mind blowing. You can probably find other ways to get 3.2%. But for a lot of people, even 50 bips on Bitcoin is meaningful to them. However, they're usually way more conservative with what they do with custody. So it's okay. I think it's pretty good, but it's not like so mind-blowing that I'm going to move any of my on-chain Bitcoin around. And I'll even tell you what I'm doing with my Bitcoin if you want to know at the end here. So Exponent is another one, another Frag BTC. This one is interesting, though it only has about 22 days left because it expires on the 30th, but this is at 7%. So 7% is actually pretty dang good for fixed rate, fixed date. The next thing you want to look at, though, is how much liquidity. And there's about $500,000 of liquidity. So yes, will you have a price impact if you try to throw 50K in there? Certainly. But if you're, moving on Solana with 10K of BTC or Frag BTC, this is a pretty good place to set and forget for a 7% APR. I like this one. So what else? Well, let's move on to LPs. LPs are actually pretty good for Bitcoin right now, at least if you're on Avalanche, which is a weird place for all the Bitcoin yields to be so good, but there are a lot of good Bitcoin yields on Avalanche. We're going to look at 3 of them. So I think just 3 of them. No, I guess 4, 5. There's actually quite a few. So if you go over to LFJ, which is Let's Freaking Joe, formerly known as Trader Joe's, there are 3 pools, kind of, that I have been watching for a while that I like. The first one is actually YBTC wrapped Bitcoin. Now, I know it's only at 3% now, but historically it has been better than this. So historically it's been anywhere between 15% to 12%. And the reason why I've liked this, we're also like coming off of a Sunday. So I'm doing a Monday recording here. And so you tend to have really low volume a Sunday, and like Saturday has low volume, Sunday has really low volume. And then Monday things start to pick back up. So I imagine tomorrow, the 3.2% will probably be somewhere around 8 to 9%. Maybe, hopefully. You can check see if I'm wrong. Now, the cool thing here is that it's all organic. So it's YBTCB wrap Bitcoin. The yield is 100% organic. And this is an average yield. So it's not like other protocols where they show you only single tick yield. So like the maximum possible yield. And sometimes it's not even possible. Like you can't do a single tick. You have to do two anyways. So this is usually better. I would say if we click on it, maybe it'll show us the average 7-day. Maybe. I forget. Analytics, I think they do. I think they show it in analytics. 7-day. Yeah. So 7-day APR, 7.1%. That's a really good yield for a Bitcoin LP, fully liquid. Unlike the fixed rate stuff, there's no like penalty to exit, right? So if you try to leave a PT, whether it be on Pendle, Spectra, Raex, or Exponent, you have to go through like the relatively thin liquidity to do that. Sometimes you can take a loss on your principal. You also don't know what the IOI is going to do in the meantime. But with an LP, you just enter and then you exit later. The only real issue is if there's DPEGs on the wrapped Bitcoin assets. So I like those. The other two that I was talking about is wrapped Bitcoin BTC-B. So I trust both of these assets highly. There's about $1 million of liquidity in there, which is also nice. And there are incentives. So the fee APR is virtually nothing. It's not really a big deal because the rewards APR is 10%. So you're getting 10% paid in AVACs, which is really nice. So I like that one. I think it's really solid. 10% on a Bitcoin LP. The other one is SOL. So I also like SOL BDC. SOL's a good protocol. They have billions of dollars of TVL. BTC-B, again, I like that asset. It's one of the best Bitcoin wrappers, I think. Of course, there's so many, so I'm not trying to offend anyone. There's so many Bitcoin wrappers. A lot of them are really good. Here, $4.4 million of liquidity, 8.9% APR. And I think you're probably getting Solve points. I haven't checked on Solve in a long time, so don't quote me on that, but there's probably still some points campaign going on there, some additional incentives. It's mostly AVAX rewards. So yeah, I mean, 9% on a Bitcoin LP is good. Like you might not be having these crazy eye-popping, but what if you were doing like ETH USDC or SOL USDC? Yeah, sure, but you're getting no impermanent loss here, and that's massive. Most people, if they do concentrated liquidity, are going to experience more impermanent loss than they make in gains. They're going to have a negative ROI, even though they're chasing a super high APR. If you're going into like-to-like pair, this is good. This is like staking. This is like lending. This is like just depositing, growing, and then exiting. That's why I like these. That's why these are so cool. Now, the next one is Black Hole. Black Hole's gotten a lot of support from the Avalanche ecosystem. It is a VE33 DEX, which means they're going to show you the highest possible APR that no one's ever going to get, which I don't like. I will just say that. I do not like that. I much prefer what LFJ does, where they show you the average APR that the pool is getting. Now, of course, if they showed that on, showing that on most DEXs is not as good of a marketing gimmick. But if you're in the space for a long time, you just end up ignoring these numbers because they're meaningless. And that's what I do. But it doesn't mean there's not good opportunities. So just because they show meaningless numbers doesn't mean the opportunities aren't good. So for me, I'm going to look at this like 14 for 15%. And I'm going to try to see what a reasonable APR would actually be. So there's wrapped Bitcoin, BTC-B. Was there also a Solve one? I think, yeah, BTC-B Solve at 11%, and then BTC-B Y BTC-B. So all these are around 10 to 15%. So I'm going to click on the one that has the highest because it has $8 million of liquidity in there and do deposit. And so here, what you want to do is go to custom and then put in a range where everyone else's liquidity is, and then sort of see what you get. And this is a 7.48%. As I said, that's a good LP APR. It's a really good LP APR, and it's wrapped Bitcoin BTC-B. I like both of these assets. It's deep liquidity, so maybe it's a little bit less dilutive than on LFJ. And who knows? I think if you're like exposed to the Black token, that could also be beneficial to you. That's been doing pretty well. Like I said, Black Hole is pretty aligned with Avalanche as a whole. And I think they're going to also do, Black Hole is doing a lot. They're not just doing the DEX stuff. I think they're also doing like token launching things. So yeah, I would definitely recommend checking it out. Just keep in mind the APRs you see are not the APRs that anyone is going to get. But the APRs you see when you put in your range are the APRs you are likely to get. So that's why I like clicking on it and then, messing with the liquidity you think is reasonable for you and then seeing what the estimate actually is. That I do like. That I appreciate from these platforms and protocols. The next one on Avalanche is crazy. It's a AVBDC or Avant Bitcoin. Now, you don't really know what they're doing. So it's a bit of a gray box. You kind of know what they're doing because if you go over to metrics, they show you a little bit about what they're doing. You can come over here, you can scroll down, and it'll show you what protocols they're interacting with. It'll show you sort of what assets are on the balance sheet vaguely. And, if you are a large LP and you ping the Avant team, they may even show you exactly what they're exposed to. But, there's not even like attestations here, which kind of gives me the willies. So I don't love the lack of transparency. I do really like the yields. And so this is one of those trade-offs where, okay, it has $100 million of TVL. It's actually pretty big for an Avalanche native stablecoin. It does have good analytics. It does show me the supply of the junior tranches and senior tranches. It does kind of show me what they're exposed to in terms of ETH, derivatives, stablecoins, governance tokens, AVACs, and incentives. It does show me all the protocols they're exposed to. Still, there's no attestations publicly available that I can see, no wallets available that I can click on, that I can scan. And so we really don't know what they're doing. And no shade to Avant. I just, I always prefer a clear box or, a decentralized transparent protocol to a gray box, or certainly not a black box where they show you nothing and they just say, trust me, you're getting these APRs, which are almost always Ponzi schemes. So I would like to see more transparency. Falcon is one protocol that I think had this issue. They had a very gray box with attestations though, and they are moving towards a more transparent box now, showing all of their different collateral types, which I like. I appreciate that. So shout out to the Falcon team. I think that was great of them. So Avant has probably the highest vault APR for Bitcoin, especially if you're looking at AVBTC, because if you go back here, you can see AVBTC, the senior tranche has 9.46%. And if you're in the senior tranche, and then something bad does happen in this gray box, then you're protected by everyone in the junior tranche. The junior tranche, however, gets 23% on Bitcoin, which is wild. Like that's a wild APR. That's unheard of in terms of a vault strategy for Bitcoin. We're gonna look at one other vault strategy from D2 that's also pretty good, but that's crazy. So it is higher risk though, because the way a junior tranche works is if any of the strategies in this gray box that you can't see, you can't audit, you can't look at, do have losses, those get taken directly out of the junior tranche. And because the junior tranche is taking on all of the losses of the entire Bitcoin vaults, that loss is kind of leveraged in that sense. So junior tranches get high APRs for a reason. They are effectively absorbing any of the losses of the underlying. And so that's why the APRs exist. So I like it. It's cool. I'd like to see more composability, obviously, for AVBTC, but just know that it's not transparent, right? You can see I even have a wallet balance. Don't judge me. I'm doing this for a competition. Anyways, Silo is another one, right? Silo has a bunch of great things on Avalanche right now, 4.8% to be lending BTCB. I think, there's a little bit of Avalanche rewards. BTCB, again, XBTC now, and then, of course, SAVBDC. You can leverage SAVBTC on Silo, but I don't know how much liquidity there is, though 15 million is supplied. We should check that out because that would be a really good yield. It would be the only looping yield I'm talking about in the entire call or video. We'll look at that in a second. But I want to mention XBTC because we're going to look at this next, but you cannot trust the supply APR here. You can't, because this is hard coded. I wish they wouldn't hard code it. I wish they would pull this from the transparency page or the dashboard, of Stream, because Stream is transparent. Stream does tell you what the real APR is right here. So the real APY right now is 5.85%. They do give you a live APY, and so shout out to Stream for doing that. The problem is Silo is pulling from the front end of Stream, which does still, for whatever reason, have hard-coded numbers. Stream, you should update that. I'm talking to you, 0x Law. And so you can't really trust this number. It's roughly, but still 5.whatever% on a vault is really good. If you can loop and leverage it, it's awesome. But you want to make sure that you're borrowing at a lower rate than your collateral is, unless you're farming the points. And then Stream points might be valuable, but just, keep that in mind. Now, SAVBDC, let's go look at that, actually. Let's go look at borrow. So we're going to go to borrow. We're going to do BTC collaterals, and we're going to do BTC debt tokens. And this is what we get. So borrow APR is just slightly lower than the actual organic yield, around 5.5%. So technically positive. There is 3.4 million to borrow. Still, I don't love it. SABBDC, BDCB, 6.7 to borrow, 9.5 to supply. Now, in terms of numbers, that's great because you can probably go up to like 5x leverage. So 50 minus 4 times 7, 28. So like 22% maybe on SABBDC leverage. But again, SABBDC is a gray box. We don't really know what's going on under the hood, and it could be things you don't want to be exposed to. You just don't know. You have no ability to choose whether or not you're exposed to things you want to be. Now, of course, like they do show you all the protocols, so maybe you can trust them on that. I don't know. I don't know how that works. You have to go look at the smart contracts and see if they can do anything outside of those protocols. And so those are the ones that I would look at for looping. Maybe XBDC if you're looking for the points. Definitely SABBDC if you trust SABBDC, Avant BTC. Nothing else for leveraging really stands out to me. Now let's go look at Stream. So Stream they show 8%, but really they also tell you, which is nice, that it's 5.85%, which does make leveraging on Silo look a little bit more interesting. But 5.85%, They show you 8%. They've had these hard coded for months. I don't know why they're kind of slacking to get those updated. Easy to enter, easy to exit, and the yields are transparent. So if you go over to transparency, it'll pull up the bank, and it'll sort of show you what's underlying all these assets. From my understanding, the way it works is it's basically collateralized Bitcoin, borrowed stables, and then farm stables. So you can go over here, stream finance, and then you can see all of the different protocols and things being farmed in order to pass on that end state APR to users. So a lot of protocols, right? You have Wildcat Protocol, Morpho, Pendle, Silo, Convex, D2, which we're going to look at as well, Euler, Spectra, Kinetic, Magpie, Silo. So you can sort of see all AVAC. You can see all the things that they're farming. It's fully transparent. I do like that. Of course, it is a lot of exposures, but nothing too heavy in things that I get wigged out about, except for, of course, Wildcat. But Wildcat is doing really well right now. It does scare me. It's under collateralized lending. However, I think that the stream is sizing out of the Wildcat position, even though it was a good position for a long time. So that's also kind of cool. So keep that in mind. Next is D2. So D2 has strategy vaults, and you wouldn't know. I mean, I guess you would if you looked here, deposit asset, but you might not know that HXXL is a Bitcoin strategy vault. Now, I have looked into the way this works. It's kind of like an options vault but like with caveats. So you get limited downside, which is really nice. But you also get unlimited upside, which is really nice. And they use other protocols like Risk to effectively do call options, but also hedge those call options so you don't have limited upside. Basically, you get a net of 10% APR, but there are some risks. So if it goes down past a certain point, now you're exposed to losses or something like that. So do keep in mind that if you were interested in the D2 strategy, you're definitely going to want to go onto the D2 Discord, where they talk a lot more about the underlying strategies, how those work, and you can get you get a lot better sense of what's going on. My basic understanding is within a range, it gets 10% APR. That range does fluctuate sort of through epochs and cycles. It is using things like Risk to do things like covered calls. It does have unlimited upside, which is really nice, and then mitigated downside, which is also really nice. And and the cap is currently wide open. So I like that one. It's pretty good, but it is kind of hard to understand, and they don't do an amazing job of showing you what is actually happening here. Core accumulation, funding arbitrage, curve trading, passive Bitcoin growth strategies. I mean, I guess for the layperson, that's kind of an explanation, but I just want to see, give me a flow chart. Tell me what the prices are. Tell me what the strikes are. Let me know what's going on. Maybe they do. I can't find it though. The next one is Maple. Now, you can't, some of you guys can. This requires KYC, but soon it won't. Soon there will be a decentralized version of this called SABBDC. At least that's what the rumors are saying, that you will be able to enter on-chain. So right now, if you don't mind KYCing, if you're an institution, if you're trying to look for a nice, good institutional grade Bitcoin yield, Maple has that, probably has the best one, actually. It's not a gray box, not a black box. They tell you exactly how the yield, where the yield's coming from. It's basically, as far as I understand, collateralized Bitcoin that's then being either lent out or being used to borrow and then lend. And so things like that. So it's really great, transparent strategy, very conservative, using the Maple system, which has billions of dollars, at least volume. I think maybe even billions of dollars of TVL now. So I like this. I wish it was already decentralized. I wish I could already take my SABBDC and go loop and leverage it, especially on Morpho, but you can't. Yet. So I'm definitely looking forward to that. And the next one is Midas. These vaults are not crazy high, right? 2%, 2.5%, but Midas doesn't have a token yet. They might have a token. They've seen some explosive TVL growth. So if you're looking to farm things like airdrops, because you have a bullish airdrop sentiment, or you like Midas in particular, and you just want to continue having BTC exposure, I like these vaults. So MBTC with lending prime brokers, and then MEV BTC, which is curated by MEV Capital, which is a big strategy team / hedge fund in the space. So next, liquid BTC on EtherFi. Now this yield is not eye-popping at all. In fact, I think it's even worse than 3.3% advertised. You're getting 3.3% advertised, but you're not actually getting that. You're actually getting 74 bips, right? And then you're hoping that you're getting another 2.5% in the future. That's not really why I like this, right? I don't love it for the yield. I like it because Bitcoin products on EtherFi can be used as collateral for the cash card, which means I can take my Bitcoin, I can use it as margin, and then I can spend against it without ever selling my Bitcoin and get 3% cash back, convert that cash back into more Bitcoin. And so now I'm paying my bills, I'm buying my groceries, and I'm converting all my cash back into Bitcoin. Now, of course, Coinbase also has the ability for you to spend USDC and then get cash back as Bitcoin, but I want to have Bitcoin collateral that I'm buying up and DCAing into and never selling. That's kind of why I like this. Liquid BTC does also give you like some APR. It's not, I don't think Liquid BTC is actually collateral, is usable for margin yet, but eBTC is. And so there's also, I think, seasons of EtherFi that will give you some APR on that eBTC. Don't quote me on that. And so it's just one thing to keep in mind and continue following closely. And hopefully that net APY goes up as more of these Bitcoin strategies become available for end users. Now, I guess second to last one before I show you my strategy is Gamma Swap. So Gamma Swap has GBTC. This is effectively a gamma hedged delta neutral-ish or like BTC neutral-ish vault that is getting 6.8%, which is really good. I don't know if it's capped yet. Sometimes these things end up being capped pretty aggressively. You're effectively like doing a neutralized USDC BTC LP, utilizing the gamma hedging that Gamma Swap offers, and then it's returning to you the net APY, which here is almost 7%. So I like it. I think GBTC also has some degree of composability. I hope to see it on Morpho because the Morpho on base is pretty huge. And so yeah, go check out Gamma Swap. The next one, what am I doing? I'm doing something very, very boring. So I am on Morpho. I have a Bitcoin collateralized. I'm borrowing at 50% LTV against it. And then I'm just farming stables. Now, the cool thing about doing that strategy is right now, Arbitrum is doing a massive campaign called the DRIP campaign, where they're heavily incentivizing lending and leveraging. So, you know, the incentivizations may not be crazy here, but a 4% bar rate is really good. So we're at Bitcoin, bar 50% LTV, no yield on the collateral, but now you're paying this divided by 2 on your principal. So let's just say 2.3%. So now you're negative net 2.3%, right? Well, that's not a really good yield, but you've borrowed 50% LTV in stablecoins, then go farm the stablecoins. Now, because if I was to do this on Arbitrum, I would probably put it into SummerFi because SummerFi is a lend aggregator benefiting from all of the incentive campaigns on Arbitrum that are for lending. And so right now it's getting 15.45%. So what is the net there, right? So the net would be LTV times yield minus borrow cost. So let's do yield minus borrow cost first. So 15.45, let's just say minus 4.5. So let's just call it 10 times LTV. 50%, so 5%. So now you have your Bitcoin, it's sitting there, you're borrowing and lending, you're exposed to Bitcoin, you're exposed to USDC. This is a really sort of, and Morpho, so this is and maybe SummerFi, you're exposed to things that you're very comfortable with. You're getting 5% on your collateral, and you maybe are getting, you know, another 4 to 8% in SummerFi tokens, which kind of pushes us over the edge into a really nice strategy. So I'm doing stuff like that. I'm borrowing Bitcoin on Morpho. I'm then farming my stablecoins because stablecoin farming is kind of my forte. And that's how I'm getting yield on Bitcoin. Though more and more, I am getting tempted to do things like LPing on LFJ, maybe doing a tiny something on Avant, definitely getting some fixed rate stuff over on Exponent. And once that Maple Syrup BDC goes live, I will certainly be seeing if there are leveraging opportunities for that on some money markets. So anyways, if I'm missing any, please let me know. I'm always on the lookout for Bitcoin yields, but I think that's a pretty comprehensive list of some of the best ones out there, especially at size. I know you guys are going to say, what about core BTC? Give me the full TLDR on that. I'll try to figure it out. But thank you guys so much for watching and have a wonderful rest of your day.